Okay, now let's take a bigger zooming into Nigeria's stock market. Yeah, we just have about some few hours before Thursday's trading session and just one trading day for the month of March remaining, because by this time next week, when the market resumes from the two-day public holiday, we'll be talking about a new month, a new quarter, as well as a new shortened week for transactions. But let's take a review of how the first quarter has been for the equities and for investors. And we have Matilda Adefalujo, investment research analyst with Meristem, to give us details about that and much more to expect. Thank you for joining us, Matilda.
Thank you very much for having me.
Okay, so now let's start a little bit. Before we continue into the first quarter, we have it. The two banks have so far released their full year 2024 financial results, and these are among what we call the fugas. First, we had from UBA, and now we have from Zenith Bank. Zenith Bank reporting 1 trillion in after-tax profit. Now, how is the market? Yesterday, we saw that Zenith Bank had a pullback, but at the moment, how are investors reacting to this announcement, and as well as some other sectors within the markets?
Well, I mean, I would say that the reaction is not as we expect. Yes, just like you said, UBA and Zenith Bank released their financials, and they recorded quite impressive results. As expected, they had growth in their interest income, non-interest income lines, even some gains on their trading income. But the markets, I don't know what's going on, but I would say that the market is not reacting as much as we would expect. And even this is despite the fact that we saw, impressive dividend payments or dividend announcements, rather, from both Zenith and UBA. But the market is still in the red. I mean, last time I checked, the market was down by about 0.34%. So, and we have, some banks, that are trading down. But I mean, I believe that hopefully, as more numbers come out, investors will now then see the value in banks. And I think that investors are also maybe trying to hold on till it's safe enough, and they have better entry point, to come into these banks.
Okay, Matilda, so that takes me to my final question with you. We have, so far, I'll say quarter to date, which is also, so far, the first quarter of the year, the market is about 2.5, about 2.2% in the green, and then 2.48% in the green, which is all down from 4.76%. And then we see the month to date at 2.2 in the negative. Yeah. What are your expectations for the second quarter and the start of April?
Well, for my expectations, just like you said, first, the activities in the market, I'll say that has been not so expected, because we expected that, expectation of dividend payments from banks, that even with the yield environment, stabilizing or even moderating, that would see rotation of funds into the equities market, but that has not been. But towards the end of the quarter, between, in the month of March, we saw some, I'll say pockets of investment, on consumer goods, the consumer goods sector. So I expect that into Q2, and especially even for April, that performance in the equities market is going to be mixed, and I expect it to be tilted, slightly to the positive side. And I'll give some of my drivers. There's expectation of Q1 earnings by banks. We've seen some, and we're still expecting the likes of GTCO, First Holdco, and and the other Tier 1 banks, to come up with good dividend announcements, and also expectation of impressive earnings by the oil and gas companies. And like I said before, we've seen some relative stability in consumer goods tickers, and also with the recent stability in FX, we expect that there will be some stable and strong numbers in their revenue. And we're looking at tickers like Nascon, Oniflower, Bank Sugar. Those are the ones that we have our eyes on. And then we are paying some level of attention to the telcos, especially MTN. There's this recent increase in tariffs. A lot of us have been crying and shouting about, higher data plans, tariffs, and all of that. So I think that well, it's expected that this would, filter into their revenue, and investors would pretty much like that. And well, I mean, whether there's been a rebase or not, we expect that inflation would also continue to do what it's doing, right?
Sure.
So we'll see some level of relative FX stability. But I mean, just like we've seen and observed before, it's not just about the market recently has not really been driven by fundamentals. There's been a lot of sentiment that's been driving activities, and despite the fact that I mean, everyone expected that with fixed income yields falling, there's going to be some level of rotation of funds into the equities market, but that has not necessarily been the case. Rather, what we're seeing is a some level of bearishness in the equities market. So hopefully all of this that I've listed, before would out in the market, and we'll see some positive side in the equities market in Q2.
Okay. Yeah, Matilda, I know you have so much to give us, but of course, when you're having fun, time is never your friend. But you've given us so much. We really appreciate that analysis and expectation for the markets, especially the sectors to look forward to as we end the first quarter. So thank you so much for your time on the show.
Thanks for having me.